You know what? Let's do
Recording
it.
in progress.
Oh,
Right.
yeah. On time.
Yeah, man. So welcome everybody to Sniper's Live Trading. Let me get the disclaimer completed. Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. And this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Let's take a look at what's up in the market this morning.
What's down?
Yeah, I should say what's down in the market.
I was watching the news tonight here in Australia. They're like, oh, the ASX, it's down, all these points and rah, rah, rah. My wife turns to me and goes, oh, well, why is this? So we're in a lagging market. It's nothing new. Happened on Friday. This is just a byproduct.
Yeah, right. Yeah, and if we look at the futures here, Matt, let's find the E-minis /ES. So what happened? Well, first off, finally, we got a little taste of it here when the market started coming down pre-Fed. And then this is the Fed announcement. And essentially what Powell said was, hey, it's going to be bad, it's going to be painful, and it's going to be long-lived. And finally, rationality hit the market, and the market came down really hard on the news. So inflation, recession, interest rate hikes, all this stuff we've known for quite a while, but the market rose and leaving many of us baffled, including the industry pundits on TV. Like, what the heck is going on? Why is the market rising? It did. And when I see my emotional experience, Matt, is I feel like relieved, like, oh, finally, it makes sense. You know what I mean?
I do. It's like this makes sense now.
Yeah, and now the bearish trade, the bearish trades that we put on here, we got in some hot water on quite a few trades, a handful, two or three of them actually. And now those trades are starting to perform better. And now I feel a lot better about throwing on long-term credit spreads because the market's acting rationally.
Of which I have 3 tonight.
What's that?
I have 3 to show everybody tonight. 3
yeah, we definitely want to see them, man. And let's go through Bitcoin. Just briefly, Bitcoin's coming down. So we have the, BITO is a nice instrument. We already have a bear call on BITO. That should be close to max profit now, or 10% off, 90% max profit. We'll look at all our trades here in a minute. So,
hey, Mike, look at that gap. Look at that gap down. Bitcoin doesn't normally gap.
It doesn't usually. It does sometimes. Let's see if there's any specific news. Yeah, Bitcoin drops below 20,000. This is the futures too. So on open last night, the futures were down big, it gapped down, and we could dig in and figure out what's going on with Bitcoin. What I did see on CNBC site, which is the one I actually like the best. It's so easy and clean, but they made reference to Bitcoin, and they attribute the drop, Matt, to Bitcoin drops below 20,000 to lowest level since July as investors dump risk assets. I was a bit surprised to hear it classified as a risk asset. There was a time when it was considered risk off, but that's new. I've never heard it referred to as a risk asset. Are we in a risk off environment? That's a good question to ask, and we can see it by looking at the impact of the US dollar. Well, first off, is gold rising? That's the first place to look. Let's see, is gold rising? No, I don't see any risk off just yet. Now, we can expect to see that if the market continues to plummet, then expect risk off. Now, before I say no, gold is actually up today since the futures opened last night. Gold is actually up from the well, it's where it started, but it dipped down and now it's back up. So maybe risk off is happening. Risk off is happening. We can look at UUP, and you can see the UUP, at least as of Friday, was up. Okay, there you go. There's your
Mm.
risk off. And if you want to see it in a chart in Tom's tools, let me just pull up a chart here. And I'm going to make it today's date. And let's pull up a stock chart. This is a really valuable way to very clearly see if risk off is happening. I'm going to go to the SPYs. Let's turn off the IV for now. And then I'm going to click this on not paired. And I want to compare the SPYs with the UUP. What I'm looking for, here's the sign we want. UUP going sideways to up, and also gold going up. Select close only, no moving averages. Let's see if we can see it. Okay, we're not going to see it just yet. Today at 10 o'clock Eastern, with gold up today, and I don't know what the UUP is doing. I don't have Forex on Thinkorswim, so I can't see the US dollar futures. But I would anticipate today, keep an eye on this chart, and I would anticipate, based on what I see here with gold, that we might see some risk off happening today. So gold looks like it wants to bounce. And certainly if the markets continue their slide, then we should very well see that. Let's take a quick look at oil as well. Well, Russell 2000. I definitely want to talk about this one today. We have a lot of open positions between Matt and myself.
Yeah, we're stacked up.
We are stacked up. I'm like, I don't know. Do we want to take any more new trades? Because we have to manage them, you know, from our side, and it gets to be a lot of work.
I know, but they're good trades.
Yeah, I know. There's so many good ones. So the rut is coming down hard. Bonds /ZB. Bonds are dropping. Makes sense. Interest rates are rising. Bonds should be dropping. Whew, thank God. Something makes sense. And at some point, bonds will benefit from risk off, especially as the yields start rising. As interest rates rise, bonds become more attractive. They pay more money when you buy them. Ultimately, the interest rate lift will be offset by the demand for buying bonds. So look for that too. And both of those things I would expect to happen if the markets continue to slide from here. And I hesitate because I said all of that. I said all of that during this period here in the SPYs, the S&P 500. So I'm hesitant, but I'm even more confident that not up is a good prognosis. All right. So anything, you know, bear call spreads on tanking stocks. I saw John, Matt, you and John were talking about a Micron trade. Maybe we can look at that one.
Yep. John legged into Micron.
He legged into it. Beautiful.
Yeah.
Maybe we can look at Delta today too, Matt, because Delta dropped since we put on that bear call. All right, we'll come back to all of that. One other thing to consider for the rest of the week is if you go to the marketwatch.com economy-politics calendar, you can see the reports that are coming out for this week. Let me make sure I got the right week. So it actually says next, but this is this week. No, it's not. You get my right dates. There we go. So what do we have this week? We've got home price index coming out tomorrow. So keep an eye on real estate, home price real estate. We do have a list of retail, residential stocks, residential real estate stocks, but look at the XLRE. XLRE isn't just residential. It's not even just real estate. It's companies that do anything to support real estate. You know, it could be cell towers. I've seen there's a company in there for cellular communications for real estate. So there's all kinds of different companies in there. And we do have an ETF list, a couple of ETFs with the component real estate stocks that we could take a look at today as well. When a market tanks, it's like fish jump in the boat.
Which one do you go for?
Yeah.
Actually, it's interesting. I ran the scanner earlier, and the financial sector's loaded with them at the moment.
What was that word?
The financial sector's loaded with them at the moment.
Oh, I thought you said labood. Sorry. I thought it was a new Australian term. I didn't know.
That's all right, mate.
Yeah. All right. We got a Cleveland Fed president speaking. I doubt she's going to say anything more dire than, well, I wouldn't say Powell. See, there's my old age speaking Powell. I said it right. I was thinking Greenspan, but I said Powell. Good. Unemployment reports coming out, jobless claims. What happens in this environment, everybody, is that joblessness increases. Why? Well, it costs more money to run your business, and jobs get cut. And so that's in there. Construction spending, manufacturing PMI, that's an production management index. That's an inflationary number. Unemployment, payrolls. So we got real estate, we got inflationary reports, and we got jobs this week. And so we'll see what they do, but those are potential market moving events. Always a good idea to keep an eye on them. Matt, anything you want to share before we look at our open trades? Anything that's
yeah, we'll get to that in a minute. I just want to go through my favorite charts, including Fib. But Andrew's raised a good question. And he said, so when did we see the change of crypto, how it now tracks the market and considered a risk asset? It's actually a really interesting point that he raises. So Mike, I did a study earlier on in the year. And at that point in time, now the correlations become less correlated now, but earlier on in the year, Bitcoin was actually 86% correlated. Well, Bitcoin and Ethereum, because they make up such a large majority of the liquidity of the crypto market, those two instruments were 86% correlated to the equity market. Now that has become decoupled somewhat since then, but it's interesting. There's a lot of people now talking about crypto, whereas historically it was a risk-off asset, is now becoming more of a risk-on asset. It's gone through this change. I haven't studied it further to understand why. But yeah, definitely earlier on in the year, I think it was March, April, I did this study. I found that correlation of 86 points, which was very interesting.
Before you leave that point, I'm going to go back to stock charts. We can actually overlay the SPYs.
Yeah, let's do it.
And BTC, and we can kind of see the correlation. Let me get some more days here. Let's go, maybe do 250. I don't know. I might change it. Let's see what the correlation. Yeah, look at that.
So you can see right there through March, April, it's sort of linked up at the end of last year. And then it's become decoupled again. Yeah. So interesting. And there's lots of emerging technologies in that space as well, especially when you look at the metaverse and everything that's happening in that, and DeFi and, oh God, all NFI, and I could talk about it for hours, but yeah, very interesting subject, that's for sure.
Yeah, for sure.
So let me share with you my favorite charts, and you know I love Fib, and if you've missed it, I love Fibonacci. And this here was actually, I can't share. Would you mind turning on sharing, please, Mr. Mike?
Yeah, I will do that. There you go.
Share. Now, I won't get caught out like I did last time. I'll share the screen rather than the web page. So this is the S&P 500. And as we can see, bounced off the 200 here. We were looking at 61.8 as support. And then this is where we started to sell off. And this was power. So what I'm looking for today is whether this 38.2 retracement level is actually going to hold, because coinciding with that is the 400 price support and the 50-day moving average. So right in this area here is what I'm looking for today to see what happens with this price action on the S&P 500. Big volume on Friday as well. If we break below this, Mike, not only the 38.2 retracement level, but 4,000, then I'm confident that we're going to come all the way back down here to 370. We'll come back down here, maybe test this double bottom again and see what happens. Now, we've got another announcement in a few weeks from Powell, which is going to be around interest rates. And we can assume off the back of what he just said, rates will go up. So just keep in mind, everybody, now that that announcement's come out that they're going to have to get more aggressive, the markets will start to price in some of that interest rate hike. So that naturally will translate into high option prices and also selling pressure. in the short term. Nevertheless, we can expect it to also have downward pressure on the day of the announcement. So keep that in mind as well. Control your risk. So I'm watching, Mike, to see what happens today around this level. And if we break this, I think we're going to come back and test down here at 370, unless we don't. But this is very interesting. Not only did it do it on the SPYs, look at the Russell. Almost identical, just at a different fib level. We're in exactly that same sort of trend, and we have double support down here at the 38.2 with the 50 as well. I reckon we're going to come straight through this 50th percentile. We're going to settle back down here at 38.2. And the Qs are no different. Straight back down there as well. So really interesting time across the three major indices that that I see as well. With the S&P is the one I'm really keeping my eye on today.
Yeah, man. Burn, baby, burn.
Down, down, down.
That was a little emotional, but the Fed meets on September the 20th, 21st. So the next interest rate hike will be on September the 21st at 2 p.m. So you might mark your calendars. I have all my Fed meetings in my calendar, so I know when they are. But as Matt points out, between now and then, the market will bake in higher interest rates. And always and then the next thought that occurred to me when I said that was, well, that was the case. That was the case here too. You know, markets rose with higher interest rates imminent. So I'd say, just to punctuate the point I made earlier, Matt, the market appears, at least for the last 2 days, to behaving rationally or normally. Andrew, I know you were quite perplexed by it as well, and hopefully you're feeling a bit better. Yeah, and that's the thing. The emotions are always going to be there. Opinions. The best approach to trading, as I keep saying, is to detach from any expectations and desires, and to simply execute your rules and take actions based on the rules. That's it. Detach and react. Detach and react. When you get attached, detach and react. Detach and react. Take your losses when it's time to take your losses. Detach, react, take your loss, move on to the next. That is such a key distinction, for psychological distinction, for traders that are really good. They know they take their losses, they're detached, they move on to the next.
So Mike, I'm faced with this exact situation in my live account at the moment. I have a trade on IBM that is currently sitting at a loss because of Friday's price action, but my system rules are telling me to stay in the trade, and I have actions associated with that. And it's a matter of going, I know what the news is, I know what the market's reaction is. I feel the market may sell off today, but if I take action now, it breaks my rules. So don't break the rules. And it's hard, right? See, I still face it. Mike still faces it every day. We're human. It's natural, right? So anyway, I'll see what happens when I wake up in the morning and see if my losses got any greater, or if I've got to initiate an adjustment or just shoot the trade. We'll find out.
Yeah. The
other, so just take a look at
one other quick distinction. So the detach and react is really critical, but even before that, it's risk management. When you gotta take care of your risk. Your job every day is to determine where the risk is and mitigate if possible, adjust if possible. And when you get to a point where it's time to take the loss, then you take it. Loss management. Forget about profits. They'll come as a natural consequence of risk management. We are risk managers. Well, good traders are, and everybody here are good traders. So we take risk management very seriously. It's our number one priority. If you do that, the winners will take care of themselves, and you'll be consistent. You'll generate the income. We know the strategies work. You've back tested them 100 times. You know they work. And time again, Matt, with virtually everybody I've coached, the minute they go into a live environment and they take a loss, the wheels come off, the data is gone, the proof that following rules works is out the window, and then it becomes, frenzy. Oh shit, I'm losing money. What do I do? Everybody, me too. Me too. I'm not pointing fingers. So that's the detach, react, risk management. That's it. That's the job. You got the tools, you got the systems, you got the rules. We know they work. If you do those last two things, detach, react, and manage risk, you're going to be well. You're going to do well, and you'll generate the consistency that all of us want as traders.
Hey, Mike, just to extend and build on a point that you raised before, said everyone in here has done the back testing. There's about 30 people on this call. That's 3,000 trades across on the sniper system, right? 3,000 trades on credit spreads. And the results, the mean results across the group stand up on that average ROI. So between everybody here, all of you, there's been at least 3,000 trades done. Think about that. It's not just 100 you've done, it's the 3,000 across this group have done. And I know it's more than that because I know plenty of you, including myself, have done more than 100. So to Mike's point, stick to the rules and detach and react. Let the system take care of you.
Yeah, just fly the system. You don't have to, don't get involved so much.
As much as we want to. Anyway, I digress.
No, it's a good point. Hey, check out the VIX. Baby, it's a rising. We do have a UVXY, you ain't got no alibi trade on on the VIX. So that trade we'll talk about tomorrow in the hedge fund course or class, whatever you want to call it, group. We are going to be in profit on that trade. And so, all right, so everything's looking good. Let's take a quick look at our portfolio, and we got 9 minutes before the open. And let's go through a couple of things here. This is our portfolio. My God, how many trades do we have? We have 17 open.
We can always have more, Mike.
You can. Yeah, you can. It is fun.
This is trading. Awesome. Do you know, after the last sniper session, I sat here and I traded for like an hour. I didn't get to bed till 1:45 in the morning. I got carried away.
No, I know the feeling, man.
Mm.
If I wake up in the middle of the night, I'm like, what are the futures doing? Let me check a trade. I just, that's part of it. So what I want to start with the rut, because at one point on the rut, we were down $935. On this day here, we were down $935. Now, we decided, and this was the 200-day average, it was above the 200, and I wasn't really convinced that that was going to hold. And I happened to be right. I could have been wrong and could have kept going up. But I said, why don't we just throw on a bullish broken wing up here and put another bearish one down here? So that was the plan. And it worked out. It just happened to work out. It might not have worked out. But that trade, which was once down 935, is only down 300. Okay. And we made money on our hedges. And so one hedge, Matt, Thursday night, something magical happened in my view. And Glenn introduced an adjustment that I hadn't thought of.
Yep.
And I was like, oh my God, that is so obvious. Why didn't I think of that? And I keep saying it, but it's proof positive that the power of a mastermind group far exceeds the mind power of an individual, even me, who's been doing this for 25 years. So I didn't think of it. Glenn did. Now Glenn introduced it to the group and I used it. And now let me just finish the point. Out of that, Johnny came back and said, Glenn did like 300 and he was in my hedge fund coaching pod groups that I did. And most people don't do 100, not most, some don't do 100, some do 100. He was doing 300 2 or 3 times.
I love it.
And he came back and he shared all that and gave us this adjustment. We're calling it put the butterfly back in the cocoon, cocoon the butterfly. And then what Johnny's comments spurred on, why don't we back test as a mastermind?
I like that.
Yeah, I do too.
What's the adjustment?
Oh yeah, okay. Shut up. The adjustment. Here was the adjustment I got filled on Friday. So let's do pre-adjustment. So pre-adjustment. Now this is, I got this filled at 9:55. Pre-adjustment. So this was the end of the day, but pre-adjustment, the stock was sitting here. And it was in a sweet spot. Let me back up one day so you can see. So the day before,
great spot.
we were, man, I wouldn't have done anything on this if there wasn't a Fed announcement. We weren't sure if the Fed was going to spur a bullish or a bearish run or nothing. And so the adjustment is simply to take a winning credit spread that was a butterfly that was up about 23% and to just contract, to shut it down, basically, drop the upper put down to one strike above the short put. Here's the short put here. So the adjustment is to simply put as few strikes as possible between the outer wings strikes, which is what we did. We dropped the 419 down to 415, this one down to 415, and we lifted the 408 up to 413.
You close both sides of it. Yeah.
Close both sides of it, yeah. And then the net result, let me do it before and after, because it's beautiful. I'm just like, man, I was spellbound with
I'm so excited. I want to see the risk graph now.
I know, I got to stop talking and just show it. All right, man.
Oh, wow.
Are you serious? What?
That's impressive.
Yeah. And so this trade is currently
I like that.
at a really nice profit. And, now we stand to lose some profit in this trade. We've got 14 days.
Do you know, in all the butterflies I've played with and all the broken wings, I've never contracted both sides at the one time?
Me neither. Me neither. I never even thought of it. Never even thought about it. But our mastermind did. The mastermind. And so when you contribute, you plug into this higher frequency of consciousness and things start happening. Well, things emerge that won't emerge by ourselves. It's the truth. Napoleon Hill talked about it in his Think and Grow Rich book. That's it. All right, now what do we do from here? I'm not sure yet. I want to spend some time on it. Now, currently what we have is a bear put spread up top and a bull put spread underneath. What I'm inclined to do is to see how the market reacts today. We got those fib levels that Matt pointed out. If they hold, we might get a bounce. We got 14 days. Worst case, though, we're making $105 on this broken butterfly. So you add that to our $300 loss in the rut, and that's going to get better once the market opens. We're going to be down even less. So we add that $100 to whatever that loss is. And this trade here, we're going to make money on this trade that was in a dire circumstance at one point. We do have a bullish one on as well. The XSP bull. And that one's pretty much a max loss. So the question now becomes, what do we do with this? We lost, we're going to lose $76 down here. That's the most we lose. I'm prepared to lose that. I knew that was a possibility. We can contract here. Let me do it. Let's see if we can contract out some of the risk in the bottom spread. I'm going to say my prognosis before I do this is that it's just not going to get, the rut isn't getting up here. The rut isn't getting up to 448. Is that true? Might
Not
be.
Ari.
What do you think, Matt? 448, is that?
Nope.
Nope. Not gonna
Unless
happen.
it doesn't.
Yeah, exactly. I'm looking at the XSP. So the XSP is correlated, of course. So 448 is way to heck up here. So with that, I'm willing to contract this 435 all the way up to right under 440. So let me just do that quickly. And this would be the adjustment I would make to see if we can mitigate the loss a little bit, but I don't care about $76 really. I mean, it's nice to have a little hedge just in case crazy stuff happens, because it does. We know it does.
I can insure a position for $76. I'd take it. I can't even get insurance that cheap on my car. You got 10 seconds till market opens.
Exactly. 435 up to 339. Yay!
And they're off. Whoa, with the gap down in the open.
Burn, baby, burn.
402.
All right, how many do we have here? We've got 4. This could be a 3-hour call this morning. There's so much going on. Let me do that contraction color that I like.
Mike, you're changing puts, not calls.
Oh, thank you. I do that a lot.
Sorry, I wasn't watching. I was watching the market open.
Yeah.
And now I'm looking at my IBM trade going, follow the rules, man.
And this is going to look at
There's no strike there. There might not be any way to contract it. Let's see. Let me check the strikes for September 9.
You wrote 339.
Oh, I did?
39.
Oh, thank you. Oh, that wouldn't make a slight difference. There we go. Thank you, Paul. We can drop it down to 54. Yeah, there's nothing there. They're worthless. Can't do it. Ain't gonna do it. That's it. We might lose $76 on that one, and I'm happy to do it. Now, and there might be an adjustment that I haven't. That's not visible to me. Kathy has an adjustment technique that she uses, but the options are worthless, everybody. So there's really not much that we can do on this trade here. So let's just let our insurance policy pay off, which it did. God, we could do hours on here. Let's see what else do I want to show. Matt, maybe you can talk about Delta. The other one.
I wasn't talking about Delta, but I did want to show BP and GM. They were getting a bit hot until if you just open those up quickly, they were getting a little bit warm the other day.
Do you want to do it?
Yeah, I'm happy to do it. Sure, no worries.
Okay, man. I'll check questions while you're doing that.
Yeah. And in there as well, Andrews was just referencing Alta. I was going to get you to, let me just get my Zoom thing out of the way. I'll pop that over here, share this screen. So on our on our GM trade the other day, you would have noticed that it was taking quite a bull run. Now it's not necessarily out of the, I'll get this Zoom thing out of the way, out of the woodwork yet, because we can see that even on this big drawdown day here, and its close was 39.23, we're still short at 40. So let's wait and see what happens today in the markets, but keep your eyes out because we may have an adjustment coming on this trade towards a day or two. If we get a close above our short, then I'll look to contract up top here. So we'll wait and see what happens. I'd like to speculate what's going to happen, but every time I do that, it bites me in the ass. So I'm just going to say, let's wait and see what happens. So GM, you would have seen, was getting a little bit warm. Let's see if the pullback in the market can help us a little bit here. So pending adjustment, possible. And on our BP trade, very similar set of circumstances. It was starting to warm up towards the end of the week, but it's not as hot as GM. So we haven't got anywhere near this triple top high up here. We're not near our short, but you can see it's still very much on a bull run correlated with that run in oil. So just keep your eyes on this, because if we get a gap for whatever reason, we might have to make a sharp adjustment. The rest of them, Mike, that I had a look at earlier on today are actually in good stead. Our iron condas are all faring rather well. So I'm happy with the way that everything's coming together. Yeah,
man. Excellent.
That sounded somewhat Jamaican, I have to say.
Yeah, man.
Yeah, man.
I bet Paul could do a nice Caribbean accent. Can you, Paul? Will you do it for us?
No.
Aw.
Because I don't understand it myself. If somebody's here rolling in patois, I don't know what they're saying for true.
What you talking about, man?
Yeah,
Pass the duchy to the left-hand side, man.
Be of cool runnings.
Hey, Matt, check out the BITO trade. We might be at close there. That's the sixth from bottom. That trade could be at max profit, or not max profit, 90% of max profit, 10% buyback, in other words.
3-4. Yep, absolutely.
So let's take that one off for close that one down.
Have you got that? Is that in? Yeah, that's in your paper platform. Do you want to put a close order in?
Yeah. We haven't been doing as much of that as we perhaps could.
Mhm.
And we can do more. If there's a need for us to work the broker platform, we're happy to do it. So
Yeah.
let me find BITO. So the simple way to exit BITO. Thought I had a GTC when ordering to buy it back. I must not have.
Mm.
What are the strikes, Matt?
On BITO, it is.
1921.
It sure is. Yep.
Okay, so there it is. Currently, it's worth a penny.
Mm.
And I must not have put in the GTC to buy it back. You should have those in on these, especially on these credits. Put your GTC orders in to buy them back for 10% of the original credit. So all I did here is I went down to BITO and I found the 2 legs that we have there.
Hang on a sec. Share your screen, mate.
Oh,
I still had it on the thing. I'll close this out for a cent because that's what you. Actually, I'll wait and see if it fills at a cent.
yeah, let's see what we get filled at.
Mhm.
So what I did is in Thinkorswim, you find your position. So in Thinkorswim, the way you do that is you go down to position statement, and then you find your stock, you expand the stock, and then you see the legs underneath. Click, control click, right click, create closing order. 1 penny. Yes, please. That's mid price. I'll just take it.
Ding.
It hasn't filled, but I'm going to put it in as a. Actually, what was the fill price, man? I don't have this. Well, I can see it here. What's the fill price on it?
Oh, I've got this in for 2, but
Okay.
like I've closed it in TTR for 2. But if this fills at 1,
It didn't. I'm going to put 2 and we'll get it. We'll get it. Let's just take it off a penny and just take it out
the
of our.
natural will just go straight through.
Yeah, it'll fill. So that'll fill here in a minute. We're 7 minutes in. I'm not. There we go. We got it. We got it for 2 cents, Matt.
Yeah, nice, perfect.
Excelente. Newmont Mining is fine. United Health, that's a pretty healthy one there. Let's look at that one real quick.
They're all ticking along really good.
Will you handle these, everybody? No, we're not there yet, but Dean asked a question about how to handle these, and you know, I like to adjust them, but you could very easily put on GTCs to close down each individual spread for 10% of the credit for that spread. So in this case, what do we get there? We sold this for 420, bought for 208. What's that? 212. So there's $2.12 of credit up here. So we put an order in to buy this back for 21 cents. GTC, just these 2. And then the same underneath. So that's one way to handle them. But, you know, similar to a broken wing butterfly, when I've got these on, I'm looking to maximize profit. So if the stock goes sideways, you know, close both credit spreads, close the entire condor down for 10% of your original credit, which is 30 cents. And you can split it if you want there and there. And then but I'm going to wait because I want to see if the stock starts running up. Then I want this underlying trade here, this put spread, to make a bit of money. And then I'll take those profits. I can contract up here, roll up the bottom spread. So I'm more inclined just to manage these, Matt. I don't know how you feel about it, but similar to a broken wing butterfly, I don't use GTCs to manage them typically.
No, you just let them run. You just let them run. I mean, you could automate it, Mike, and you could automate it such a way that you could GTC like a roll of a spread. So if you can buy a spread back for say like 10 cents, and then sell the next one. So you could automate a roll, which is something we can talk about when we get to credit spread mastery in a few weeks, as you know, possible automation. But like you, I just let them run.
Yeah, just let them run. Let time do its deal. Theta's our buddy here. Okay, Theta's our big friend. That Theta gets bigger as we approach expiration in 56 days. That's going to continue to get bigger for us. I mean, probability of profit on this trade is 86%.
See, the IV had a bit of a pop. Look at that.
It sure did, yeah. And that's probably going to rise a bit. But one thing to note is as IV rises, Vega is going to hurt the position temporarily.
Yeah.
But at the end of the day, at the finish line, Theta always wins.
Mhm.
So this might be a temporary blip, Matt, where the colored lines get pushed this way if this thing keeps dropping. But
Mm.
that's temporary. It's not a big deal. Yeah.
We see it happening running into earnings too when IV rushes in those short-term options. That's another big catalyst.
Mhm. Exactly. All right, Matt, do you have any, you or anybody else have any trades they're looking at? I know John.
I do. I've got three.
Mike, you got three? Well, let's see them.
I got three. Let me share. So, oh, no, I don't need IB to log off on me now. There we go. So the first, whoops, share my screen. The first one that I've got that has come up is on Bank of America. I'll just turn these fibs off. So let's go and have a look. I'll just drag. I think it was, oh, go away. I'll drag think or swim up because I have to be honest, Mike, I really prefer the charting in this than I do to IB. I use IB charting, but this I just find more aesthetically pleasing. So when we have a look at the XLF, and we can also note the gap down on the open today, Bank of America sits within the financial sector, being a bank, and we can see that it's had a rather large drawdown on Friday. We also note, that the sector is also very heavily correlated to the S&P 500. Now, I ran a scan prior to today on the long-term out-of-the-money call credit spreads to see what came up. And the initial result that came up was a 39.40 on Bank of America. So I've opened the spread up a little bit to 39.41. So it gives us a little bit of room to move in the event that we have to do any contracting. And it's still generated a nice 14.2% return with the probability of profit at 82%. So where's our protection to the upside? Short 39, long 41. We've got the 200 moving average here at, go to Bank of America. We have the 200 moving average at 39.92. Ahead of that, we also have 36 acting as price support and 38. You can see how Bank of America has been running in these really tight channels. It's in about $3 channels that it's been sitting in. It's been pretty quiet of late. When we look at our standard deviations, sorry, this has gone a little bit wonky since I opened these up. And I come down, we're right almost out up to the top of our first standard deviation. So what I didn't do, Mike, that I'm going to do now is I'm actually just going to move this out to a 40.42 and see if it still meets our parameters, because what I'm going to gain by doing that is a higher probability of profit. I'm going to get price resistance as an extra level of protection, and I'm going to be right on my third standard deviation. And in doing that, it's dropped my return to 8%. So by coming down a strike at 39, I'm almost doubling my return at 14.2. So that's the first one I came up with, which was Bank of America. Thoughts, Mike?
Yeah, a couple thoughts. The one thought that came up in the back of my head is banks. Well, the banks will eventually shore up and begin rising when interest rates rise, because they make more money. And so that's the one, question mark I have about the trade. And so what I was in the process of doing as you were speaking, Matt, was to take a look and see, right now, let me grab the screen from you.
Yeah,
I like
sure,
this
yeah.
trade, but I think it's a great trade. I think we should do it. We got plenty of time to adjust. Let me grab the screen from you real quick here. One sec.
You got it? I don't know where my Zoom controls have gone.
Excuse me.
There you go.
As you were talking, I was like, well, why don't we put on a trade right now, a bullish broken wing butterfly, just in case banks shore up with rising interest rates, which ultimately will happen, historically speaking anyway. And I'm just going to go to the more setting And the reason for that is I want a longer term butterfly. So this is what a 60-day, 90-day trade somewhere in there. So I want to be able to go further out in time. And I want to place the short strike further out, further up. And so here I've clicked show, and I'm not interested in a 15-day, or maybe I'll change this to 60. So I want a 60 to 90 day. I could maybe just make it 45. I'll take a 45-dayer. And so I want to basically put on a hedge such that will offset loss that will happen if the stock rises towards the short 40 call. And so I'm just going to see if there's anything there. I'm going after the whole XLF, and there aren't any. Okay. Okay, so there's none there. But there could be some there today when this data refreshes. What's not here today is likely here tomorrow. So keep an eye on. Here's what I would do, Matt. Put the trade on, and then be in the hunt for
broken wing
butterfly. Yeah. And
hey, Mike, have in the HFM sessions, and I haven't listened to all of them, but have you shared our little GCC trick for broken wing fills?
I'm not sure which one. Are you talking about the cancel replace?
No. So for butterflies and broken wing butterflies, putting them in as a GTC order, because generally you'll find you might get a fill in 1 to 3 days as the price moves around on those particular orders, rather than dumping the trade that day and then constantly finding a new one. But keep an eye on it, because you might find that trade no longer meets your criteria. So review it every day, but you can leave the order in your broker platform for a couple of days, because you might find that you actually get a fill as the price agitates around for a couple of days.
Yeah, absolutely. Yeah, we do talk about that. I don't think I mentioned it recently, but you can use GTCs, as Matt points out, to get in. If you do, you got to keep an eye on them. I got filled on one that I forgot about.
That you didn't want.
And I didn't want to get filled on. Because I didn't check. You got to check the before the market opens each day, and be sure that let's take a look at the pre-market activity. And if the stock's moving in a way you don't want, cancel the GTC. So somebody I know very well has heard that. Paul said, have you shared the Save BWB wizards? No, I haven't actually built any wizards for BWBs, Paul. But if you wanted to, I mean, I've done my own, but if you want to, maybe we call this.
I just saw when you were looking around there under the thing, there was a long-term BWB and short-term BWB in the little saved area.
Yeah, so I did it for myself, but I haven't shared it with you. Let me share it with you right now then. So what you can do when you like what I've done here is I've changed the days to expiration on the minimum from 15 to raised it to 45. So a little bit longer term, and you can also do short term as well. And then if you change these settings, you're very welcome to, of course.
Mike, you haven't got your screen.
Darn it. I've only been doing this for 25 years and I always forget. 45. So what I did here is I changed the wizard from 15 here to 45. I don't want a 15-day butterfly right now. I want a longer term set it, forget it kind of butterfly to offset my set it and forget it long-term credit spread. And what you can do is you can alter. So I changed this number from 15 to 45. And then if you like these settings, once you like them, then you can say, and then you can just create a new name and then save it. And so then when you come into the wizard, excuse me, you simply select the wizard. That when you come in, you would go right to your wizard settings and say, I want this one, short term, and then you load it, and then you run it. And then no, I want this one, Paul's long-term broken wing butterfly, load, and now you're off to the races. So you can say there's wizard settings like that. You can save wizard settings like that in all the scanners. So we're moving from the default scanners, tweaking them a bit, and it's really powerful. It makes it a lot more powerful when you get a little more subtle with regards to how you build your trades.
Oh, absolutely.
Yeah, my voice is acting up for some reason.
Did you have a good weekend?
No, I didn't. I was recovering, and I went to the beach a few times with Zion. And oh, have you guys all seen that picture? Let me show you guys a quick picture. We're gonna look at some trades here now, some new trades. So Matt, when I come back, well, let me do it at the end. Let's get that. Shall we get that Bank of America trade?
Yeah, sure. I'm actually just in the process of loading it now. So in IB, getting it loaded up under the strategy builder. I can't remember, what is it, 25 cents. So I'll get this in. Quantity 1, where's our risk profile? 175. So 1, 2, 3, 7, 14, 440. I should be able to get 3 off. 436 short, 18 November 39 call, long 18 November 41 call. Submit. Okay. Let's see. Okay, that's gone off. I've just got to wait for that. In IB, Mike. Oh, there we go. It's just gone green. So what they do is it goes to an exchange, sits there, monitors, and then goes live. Whereas Think or Swim punches them straight through to the exchange in TDA straight away. So I find that between the two platforms, I generally end up with, anywhere from 0 to 30-second delay while the order validates on an exchange. So that's in and working for us now. I'll let that sit there. The other one that I came up with was on MasterCard. So again, this came out of the scanner at a 380, 385. I've moved it to a 380, 390. I'll just turn my fibs off again, sorry. And I'll put on my standard deviations. We go and have a look here at MasterCard. We can see that we have our 200 moving average at 348. And we're looking to sell all the way up at 390 to 380 and long 390. So we're all the way up here at 380. So we have, 350, 360, 370, $10 price resistance levels on the way up before we get all the way up here at 380. Now, don't get me wrong, I would have loved to have been up here at 400, but there's no premium. But being this far away is still something that I'm more than happy to entertain. We're close to our first standard deviation. We've got plenty of upside support. Food for thought. Should MasterCard start to make a run, we can hedge off with a broken wing and everything. But as we're now starting to think through the longevity of the trades and what you can start doing with them, you could potentially turn this into an iron condor as time goes by. If it, made its way up here to 360 to where these prior pivot highs are, and then we saw it start to channel again, you have the option to come in and sell underneath and garnish a bit more premium. But this, I actually like the way that it's shaped up. Now, one thing to bear in mind about both the Bank of America trade and the MasterCard trade is earnings are due through the life of these credit spreads. So that's something that you want to be mindful of. You can either A, choose to hold it through earnings if you've done your analysis and you're comfortable with the price action, or your prognosis determines you're happy to hold it through earnings, do that. You might choose to exit. I'd recommend probably a week or 10 days before you get IV rush. Depending when the options expire, if they expire in the following month, you'll find you'll get a rush and then a crush. So it'll short-term impact your credit spread. You'll see these lines push into loss as IV starts to rise. Post earnings, it'll suck them back the other way. So it'll impact you leading into earnings, but then your IV will recover post earnings. So that's the trade that I found on MasterCard, but be aware on both MasterCard and Bank of America, you're going to have earnings through the life of these credit spreads.
Yeah, and that's fairly typical on 90-day trades, of course. If you have a 90-day trade, that's going to happen. It happens a lot on these. Hey, Matt, one thing I want to raise is, I'm going to grab the screen and share something real quick.
Go
So
for it.
these are two stocks in the same sector. Now, I don't have a problem doing maybe
I
two.
knew you were going to raise this actually.
And while you were talking, I wanted to see, well, how correlated is Bank of America and MasterCard? And there's the earnings that you referred to. And this is a paired version of the overlay. So I've been using not paired. I just wanted to say, start them at a certain point back on August 17th of last year. This is a year chart pretty much. And you can see they're quite correlated. And they've been moving pretty close together for the whole time. I mean, there was a breakdown here. Of course, news specific to a company can MasterCard dropped here when Bank of America didn't. They're in slightly different businesses. And so that's something to consider. And there is a tight correlation. So the bottom line is, if you lose on one, if one gets in trouble, the other one will probably get in trouble too. And that's okay. But don't do, I wouldn't say do any more than two in the same sector. Birds of a
And then
feather.
make sure if you're hedging off, your hedge takes care of the risk in both.
Yeah.
Unless you want to split your hedges, that's perfectly fine too. It's just another trade to manage.
Yeah, exactly. Exactly. Anyway, shall we get filled on that one?
Why not? We're going to see how we're going on the first one as well, which is still in here. I might just dial this down a bit. I might take a little bit off. Okay, so in IB, whoop, share my screen, that might help. So in IB, again, I'm just working on building a layout for everyone, but I built an order tab. We'll come back in here and we'll go into MasterCard, enter, list it, shift enter. And we want November 18 as our expiration, 380, 390 call spread. So we'll come down the chain, we'll go November 18, strategy builders on, vertical spread, click this, short the 380, move your mouse wheel, the 390, builds your spread for you. So selling one leg of 18 November 380 call, long one leg 18 November 390 call. What did this have it in as? $1.45 credit. $1.45 credit. Our risk profile 855. Keep that in mind, everybody. If you're sized to circa 500, this will break your risk profile. For those of you that have more of an audacious appetite, maybe a few of these would be more to your liking. It's $1.45. We'll put that in and send that through to the broker. You can see here, Mike, we've got not yet acknowledged at the exchange, so let's keep an eye on that and see if we get it active. Whilst that's happening, Oracle is the next trade that I came up with. So different sector now. We're in XLK, we're in tech. So if we start having a look at tech, we can see that we had, like the rest of the market, a drawdown as per the announcement, a gap down earlier on with the market open, correlates with the rest of the market, bouncing off the 50. Interesting.
Yeah.
But
so
still
SPYs-
well, pardon?
SPYs as well. I was just checking the SPYs.
Yeah.
Have, dumped
Yeah, yeah.
bounced up 4,000 on the S&P.
Yeah, so you'd be looking at, oh, hang on, SPX. Yeah, so you'd be looking at this, yeah. Anyway, XLK, I digress. So we're under the 200, which is good. So we've got big resistance on a sector, also coinciding with 150 price resistance as well. Always nice to see. Oracle itself, we see we have price resistance and the 200 coinciding at 79 and 80. And this particular spread, we're looking to sell 85.90. I'll just make sure that I haven't. Yes, I did open it up because it was an 85, 87.50. So looking to sell all the way up here at 85, which is above this prior consolidated high that we see here back in April. And 85 as well, being in around fifth also acts as price support. We can see Oracle generally trades in 5-point channels, as we can see represented here by support and resistance. So 12% ROI with probability sitting up circa 80%, 79.9. And that was the third one I came across. And I'm sure Michael could have found a plethora of other ones, but I thought I'd stop at 3 because we get quite a lot to manage.
Yeah, and there's a lot right now. I would say bear calls, running the bear call spread search against the all optional stocks and indices is a good idea right now. So the one question mark I have on this one,
Yep,
is earnings is in 17 days.
yep.
In this environment, I would be okay with that. And then I would look back and see what did Oracle do the last earnings. It gapped a little bit. It gapped down, then recovered, and in the prior earnings, it didn't move that much. So that's what you want to do with your earnings analysis. Is it, what does the stock normally do?
And Mike, we can show them. I don't know if you, from memory, I'll go over it anyway. You can actually come in here into stock rankers, stock analysis, sorry, and you can go earnings effects. And you can actually check on IV pre and post earnings, and you can check on stock price movement pre and post earnings. So as part of your prognosis, you can come in here. I'll just hide the wizard because there's quite a lot of stuff contained in here. But here's the defaults. So if you want to know how a stock behaves through earnings, you can come in here and we can say, okay, I want to know what Oracle does over the last 4 earnings periods. What's its price change been leading into earnings? Now, if you turn on the wizard, you can actually say, well, how many days? So this is looking at 4 days before earnings. Mike said we've got 17 days till earnings. So you can say 17 days out from earnings over the last 4 earnings periods, what has Oracle done? And you can go and get the data on it. And we can see here it's risen, sorry, it's dropped 5% leading into earnings. As you can see, you've got a -7, -5, -6, and a 2. So this is the median change leading into earnings. So that, Mike, yeah, so what? Yeah, exactly. So I'm getting a bit excited now, right? Because this looks like a good trade. Maybe it's so. Well, it was a good trade before we did the analysis, right? But now we've just got another catalyst behind it. So that's what Oracle is, and I'm so tempted to jump into earnings mastery and say, could this be an OCB? Quite possibly, but that's a different topic.
Yeah, it probably is actually, and that's a topic we're going to talk about at the end here. Just so everybody knows, you might be getting ready to take off, but in a few minutes, I want to talk to you about the earnings mastery course that we're launching today, and you've all been offered a 50% lifetime discount, and I want to talk about all of that here in a minute. So if you're compelled, feeling like you're ready to take off, if you could hold for a little bit, I want to talk a bit about what we have in mind going forward with earnings, Matt. I mean, you and I talked about this week. We have some really cool stuff happening.
Systems.
Yeah. Well, let's talk about that now. And hey, Matt, let's check out the Delta trade, because we're talking about legging into an iron condor, and Delta's moving our way now. So
sure. I'm going to shoot this order off and I'll hand back to you. There you go. I'll work my spreads. Do you want to talk about Delta?
I can, or you can. I'm happy to do it. Want me to?
Yeah, sure.
Okay. Do you want to?
I'm happy to. I'm just working spreads. So I'm easy either way. I can't put the screen.
Oh, I took your screen share down. Sorry, buddy.
I can live with that.
While you're doing it, I want to talk to Andrew. Andrew, I see all your comments about the world being crazy, and I know how you feel because I have the same thing. What I would say to you is detach and quit having expectations. It's much easier, man. Remember, we can adjust these strategies. They all have high probability when we get in, and there's no need for us to. I'm speaking to Mike too right now. There's no need for us to be upset or astonished by activity in the market. It's crazy. Stocks don't do what they're supposed to do sometimes, the stock market. So let's just detach and let's relax and take some actions. Detach, react, detach, react. And I love you, man. How we doing there, Matt?
Yeah, good. I'm just working my spread. I'm down to $1.37, $1.38 on MasterCard. I've got to get this data streaming issue fixed in my paper platform.
Show us. Let's see what you're doing.
So what I'm doing is I'm actually putting it into Think or Swim to get the mid price, and then go and modifying, if you really want to know, and going and modifying the IB platform. So Bank of America hasn't filled yet, so I'm going to drop this down a little bit, see if we can get a fill on it. And get it in 22. See, now I'm starting to wonder if this is going to be viable at 21 cents. This is something you want to do, everybody. I bit myself in the butt when I first started trading. There we go, we've got a partial fill. Before I met Mike, and I was dropping my fill price without checking TTR first, and I was finding my trades were not as good as what I once thought they were. So I've got a partial fill here of one contract. You can see that because I've got a quantity of 1 out of 2. So I need to go back here and just see if this was to fill on 21 cents. I actually am still going to be all right, but let's have a look here. Bought that for 25, 6, which is going to give us 21 cents, 11%. Yeah, I can still do that. I can do 11%. I'd want to be conscious if I was to drop it anymore. MasterCard, I got down to $1.38. So I'm going to buy this for a little bit more, 5.787. So all I'm doing here is I'm just revalidating based off of my fill price if I still like the trade. And look, at 16 points ROI, I've got room to move. So you know what? I want to get into this. So I'm going to go, I might even go $1.35. It's another 3, that'll be 290, Mike. And that's going to give me 15%. So I'm still happy with that, but
That's good.
I'm waiting for that to be accepted. Oracle, 56 cents is what I've got here. See, I'm down at 12 points here. So if I went and did this for 43, this might push me a little low. 11, no, I could do that. 53, shave a bit off here. So all I'm doing is I'm just working the spreads and checking viability of the trade. As I go through it and trying to, there we go. So we've got a full fill now on Bank of America. That's just gone off. Here's my little confirmation down here. Bank of America, bought to open 3, 21 cents each, $2.40 commission. So we've got that one off. Just got to keep working the other 2 spreads.
Excellent. Hey, Matt, you know, another thing I do on these is I use GTCs, especially on these, because there's no real urgency to get into these trades.
Yeah.
So I use GTCs quite a bit. I'm getting filled on these as well. Excellent, man. Good job. Thank you for sharing that.
So here's our here's the 3 that we have in now: Bank of America, Delta, and Exxon.
Excelente.
Nice.
All right.
Do you want to talk about earnings, Mike?
You want to do the? I don't think it's time to adjust Delta yet, but let's talk about it a little bit.
Yeah, sure.
Delta Airlines are suffering because of inflation, and it's expected that people will fly less. So airlines are down. I'm still going to be flying, but some people aren't.
Ticket prices are coming down for the fall also.
Yeah. You know, I noticed when I flew down to Costa Rica the first time, it cost me like $350, and then flew back for Houston in July, it was $1,000. So I'm happy that prices are dropping a little bit. So yeah, we legged in. So we placed a bearish credit spread, and we said, well, maybe airlines are going to drop because there was a piece of news that came out on the same day we placed it.
Screen.
I'm looking at yours.
Oh, yeah. I'm still sharing. That could have been dangerous. I don't know what I'm going to put up there. Because John was talking about, legging into Micron, but we can have a chat about this and where we'll leg into this on Delta.
Okay. Yeah. So we could have iron condored this at the beginning, right? But with this bearish prognosis on the stock, it makes more sense to wait for the stock to drop, wait for it to hit support. Maybe it's 30. I don't know. It hits 30. You got strong support at 28, 29 or so, and then sell for more credit, maybe even further out for the same credit. So that's another strategy with these iron condor long-term credits, is to start with one. In the event you're right, and we had every reason to suspect Delta was going to drop, which is why we didn't iron condor it. Matt, you had an original strike at 25.
Yeah, down here.
So we could still sell that at 25 for more money if Delta keeps dropping.
Where were we doing that? We were doing that last week. We were up here somewhere. So yeah, with this pullback, we would have grabbed a little bit more premium. Because there's 50s here now. I reckon, Mike, if this 50 breaks, we'll see where it stops. I'd suspect 30 being around 10 price support. We get a couple of days consolidated close here. I'd be comfortable it's settled, and I'd come in and sell at 25 because that's under the prior pivot lower down here at 28. I mean, you might even, I don't think strikes were out yet. You might even get a 24.50. You might even get a 24.50 to get under 25. You might get like a 24.50, 22.50 maybe underneath.
Yeah, possibly. Let's talk about John's trade on Wednesday.
Micron. Oh, sorry.
Yeah, let me grab the screen from you, Matt, real quick.
Sure.
I want to talk about the changes, but let's look at Micron, see what Micron's doing. I haven't looked at it today. Micron. Yeah, I'd be interested in understanding, John, what your opinion is on Micron. I think it looks more of a, I don't see it in dire straits like some of the other companies. I'd rather go after the weak. It's kind of vampiric.
That sounds rather
like a vampire, like a vulture, swoop in and grab carrion. That's a good approach. But let's hold on that one, John. Let's talk about this one on Wednesday on the group coaching call, and I want to know more about it. But we're kind of running late, and I want to make sure everybody has time to go to their jobs, those that have them, and quite a few of you do. Just a quick look at what's going on in the markets. So John wasn't there. We had this is the futures, and they bounced off 4,000. That's a super strong support level. And if we break below there, as Matt pointed out earlier, expect moves down to 3,900, 3,800, maybe 3,700 is going to be mega strong support. So I would anticipate that we'll see probably a run, range bound between the 200 and 3,700. If we crack below 3,700, watch out below. We got further downside from there, maybe big. All right, are there any questions or comments about any of the material today before I want to talk to you about what's up over here on my side here with Gerardo and I and Matt, what we're up to, and make sure everybody's clear. We've had some changes that have happened that are in process right now. You've gotten a lot of emails this weekend about earnings mastery. So I want to talk about it. I want to talk about the mission of this company and our major intention, which is to keep things as cheap as possible for all of you. I think you'll agree the prices that you see here are a lot less than you're accustomed to, and you're not locked in for a year. It's month to month. I'm doing all I can. We are to provide you with a very cost-effective yet powerful way for you to shore up your trading and be successful and make money and transform your lives. So that's what we're up. That's what we're up to. So here's what's up. This is what we're doing. First off, we're launching this earnings mastery group coming up. Let me do it right. So this is the new offering that starts today. Monday from 3 to 4. It's live trading for earnings. Group coaching on Tuesdays from 5 to 6. Live group coaching for earnings. When I say earnings, I mean optimal red wave straddles, optimal call put, aka Brutus in the money map world, 24-hour iron condors. That's part of this now too. And it's the same thing as you have with snipers and hedge fund live. It's exactly the same thing. So the reason I love this, these buttons is because I built them. I designed them with help, of course. This is my baby. And I've been publishing these trades for 6 years. Most recently in Operation Surge Strike through Tom and Money Map. This is my performance so far this year. These are actual filled performances by a third party. These are the returns we've gotten in January, February through now. And you'll see here pretty magical numbers. We had 3 losing months. Notice the losing months are on average, far less than the average winning month. So we're making money. Our subscribers are happy. And so there's a lot of power in it. And imagine having this atmosphere that we have with snipers and hedge fund in an earnings environment. And so that's why I created this. The price is 147. Let me talk about pricing real quick. Why am I doing this? Why am I putting my time and my effort and my money? It costs a lot of money to build what I built. It costs money to pay Gerardo. Matt is going to be taking this on. I'm going to be paying Matt. And I want to be able to have the company sustain itself. The profits for this, for me, are going to a retreat center that I'm building here in Costa Rica that will be focused on transforming human lives, not from trading, but from consciousness. Let me just call it consciousness, spirituality. I've transformed my own life, and I want to transfer other people's lives. And so that's why I'm doing it. No, there's costs. And you've seen the website, what it does. Costs a lot of money, and I need to charge something. And so the earnings mastery course, just like snipers, is 147. And because all of you've spent money with us already, with me and Gerardo already, what I offered everybody was a 50% discount. That drops your price to $73.50 a month. That's about $8.58 a session, and that doesn't even take into account the extra time that's put into the WhatsApp group for live market and trade updates and the forum. All that you see in snipers and hedge fund is going to be provided here. Matt, I'm happy to say, is going to be taking this on in probably 2-3 months. So Matt's going to be the guy that runs the earnings mastery curriculum here.
And I'm super excited. I love these systems. Love them, all of them. So, yeah, I'm really pumped to be taking them on. I think it's amazing. We're going to do some great stuff. And yeah, strap in. We're going to have a lot of fun.
Yeah, man. We're going to start today at 3 p.m. So, you know, I get that, you know, if there's money that we spend, and I hope that you feel like what you're spending so far has been valuable, and we intend to keep it going. Matt is here for a reason. Matt, I had a little emotional moment when I was watching you today, because I've been working with you for what, 2 years now, 3 years almost.
Yeah.
And
Yep.
you've come a hell of a long way with hard work, and you have such a big heart. You care about people. You tell the truth. You're smart, and you know, we're cut from the same cloth, I think, and I trust you implicitly. And but yeah, that's what I want to say about all this,
Thank
guys.
you, brother.
Hey, man, thank you for being with us, man. It's a joy to have you.
Mike, how do we sign up for this?
Yeah, there were some emails sent. Gerardo,
I didn't get it.
You didn't get emails?
No.
Okay. Hey, Gerardo.
Yes, sir.
Can you post the discount link maybe in the chat here, or WhatsApp maybe?
Sure.
Both.
I will do it right after we finish here.
Yeah, so what Gerardo is going to do is post the link where you can pop in and get the discount, lifetime discount. So yeah, I'll let you take care of that, Gerardo. And if anybody has questions about any of it, just shoot us an email or call me, or use support on our website and ask any questions that you have. So, are there any questions at the moment?
Yeah, just in the chat, Mike, just consistent, a number of people saying, can we have the link, please? We want to sign up, haven't received it yet. So as soon as Gerardo gets that out, I feel a number of people are going to join it. And Mike, I just want to say to you in front of everyone, thank you for the opportunity to lead this under MWTC, because this is, as you say, your baby. And what everyone might not know is before these buttons were actually programmed and built, Mike used to run these systems manually out of the tools for years. So obviously going through earnings mastery, you understand the functionality that's built into these buttons. You can just imagine, the labor of love that was. And then when he finally got the buttons, how refined it is. And, I've gone through earnings mastery a couple of times with Mike, and they're fabulous systems. And as Mike's built them, has now afforded me the opportunity to run it for him. I'm very humbled and very honored. So thanks, mate.
Thank you, buddy.
Love you, brother. And we'll definitely do it justice in earnings mastery. So Mike will run it for the start, and then I will transition through and keep it going. I think Mike's going to do the first wave of earnings, and then I'll pick it up off the back of that.
Yeah, totally. Now, the other thing I want to talk about is snipers. So,
Thanks, John.
Yeah, what did John say?
John goes, great stuff, Matt. Just work on the accent.
Dude, when I
Matt,
went
I started working from Australia in South America, and when I left Colombia 4 years later, they congratulated me and gave me a certificate saying I'd introduced bloody to the Spanish language.
When I first
So
moved down there,
I know where you are.
yeah, man. When I moved to Australia, I had trouble with some of the slang. I remember somebody came up to me at the end of my first Sydney big seminar. It was like 300, 400 people in the room, and somebody came up and said, "Hey, good on you, Mike. Good on you, Mike." And I was like, "What? Good on you? What does that mean?" So there was a language I had to learn, and I came to love it. I love Australia. Okay, now snipers. Snipers.
Hey, Mike.
Yeah, buddy.
Sorry, before you start with the sniper part, I just want to mention everybody, please check your spam folder, because we send the email to all of the hedge fund live subscribers. So probably you have it there. I will post the link later in the WhatsApp group, but just to make sure you are receiving our emails for future communications.
Hey, Gerardo, how do we, if our stuff's getting spammed, how do they correct that on their email site? I don't know how to do it. I can't remember.
I'm gonna check that, but if we need to make a correction of that, I will probably give everybody a link next session so they can fill a form, and that way Kajabi will certify our email. It's good receive to everybody.
Yeah, that sounds great, man. Thank you, buddy. All right, now, the reason I started snipers was eventually I want to open this up to the general public, and I thought snipers might be a way to do it. I'm not determined that that's not the case. I don't think that's the right strategy for the novice. Snipers is long-term credit spreads primarily, which is part of the earnings mastery, the hedge fund mastery curriculum. So what we're going to do is keep snipers. I'm going to, let's say, dumb it down a bit, do the market analysis, do some credit spreads, do some earnings trades, maybe, basic systems and Tom's tools. I want to keep it digestible for the novice. All of you are advanced. So I want to have that snipers. You'll have access to snipers. Everybody gets this call every Monday is going to remain. We're no longer, though, starting next week, we're no longer going to have snipers group coaching. All right, so we're going to take an hour away, and we're going to take that hour and add it to Hedge Fund Live and Hedge Fund group coaching. So you get exactly the same amount of material, the time, you get access to all the same stuff you've gotten before. So I don't want to take away anything. And originally I was going to give this away, the earnings mastery, to all of you, but I realized I've got to pay Matt. I got to keep the business afloat. I got to generate some profit so I can build on my retreat center, which is a way for me to contribute to people in an even more meaningful way. So that's what I have for all of you. If you have questions, just ask them now or email me or call me, and I'm happy to have one-on-one conversations about any of this. So if any, especially if you disagree and you don't feel like this is fair, I want to hear from you. Okay. I think it's fair, but Dean says whitelist the email domain in your email app to accept emails in your inbox. Yeah, I'm not sure how to do that either, but so there's a chat here. Dean says if you can maybe do a search on whitelist, or maybe Gerardo, you could help with that as well. Whitelist your email domain in your email app. Is that for us to do that? Yeah. Dean? Oh, we need to do that. Say again? Dean? Okay.
Hey, Mike, scroll a bit
sorry,
further
Mike.
up and-
Yeah, so what you do in your email app is, I use Yahoo. I know there's also Gmail, and there's a ton of others out there. And they all have different mechanisms to whitelist the domains. So just kind of Google it at year end to see what the instructions are. For Yahoo, you just take the email that's in spam and you can actually right click it, and I think there's a whitelist. Again, this is just off the top of my head, so I recommend you just kind of Google it to get the exact instructions. But I do believe it'll pop up a email filtering mechanism that you can then put the email domain in, and it'll whitelist for you and take it out of the spam for all future emails that are received.
Thank you,
Hopefully that
Dean.
makes sense.
Yeah, it does. Thank you very much. Appreciate that.
Yeah, also in most of the email providers, you will find on the top of the spam email, you will see a message of this is not a spam, or this is a safe address. So you click there and that will make it safe to receive your emails on your main folder.
Yeah, beautiful. Couple questions. Johnny says, is there a yearly price? Yeah, Johnny, the yearly price is more than what you'd pay monthly. It's $73.50. There's just no room to discount any further. That's such a big discount. So we didn't even offer the yearly price to you. Other people are paying full price. The people that'll join in 3 months that I'm currently coaching through the earnings course, they'll pay full price and they'll have a yearly price, but this is cheaper. This is cheap as we can get it here month to month. You're very welcome to pay 12 upfront if you want, but you don't need to, man. Just you know, keep it $8.58 an hour. Andrew says, so to be clear, Snipers is going to be more entry level, and the advanced group here is really going to be served by HFM sessions. Yeah, well, I'd say Snipers is going to have a mixture of credits. So we'll do some long-term credits. That's actually a basic scan. It's not even, it's available to everybody. So we'll be doing long-terms. We'll be doing some adjusting. So I wouldn't say it's just entry level. It'll be a little bit more entry than we're doing now. And then we're going to really concentrate on digging deep on the really advanced stuff in the hedge funds.
Like the advanced adjustments and stuff that we're doing at the moment, Mike, they'll drop. It'll just be standard long-term credit spreads, maybe a contraction, but all the advanced stuff won't be there.
Yeah, that's correct. That's correct.
And there's no Snipers group coaching, Andrew. So that hour, so we do hour of live trade now, which generally we do hour and a half, but the hour group coaching disappears. That time is now put back into HFM. Yeah,
exactly. Paul makes the point that Monday morning market update works at any level, I think. Yeah, I think so too. I think there's a lot of value in looking over the week, what's coming up, deriving a prognosis, looking at sectors, that sort of stuff. I think it's really valuable in and of itself. And I thought about taking it off, and I was like, well, no, that hour of the week is really a good hour to, get oriented for the entire week and start coming up with trades and building the plan for the week. All right, with that, I'm going to close this down here. Matt, is there anything else you want to say before we wrap?
No, I just want to say thanks, everyone. I've had a really great session today. I think we've got some good trades. The market's in very interesting times. There's great energy in the room. So thank you. Have an awesome week. As I won't see you on the group coaching later this week, I will see you next week for what will be our final advanced snipers.
This is the what?
No, isn't it next week? I thought next week was the last one of
Well,
these.
You know, Monday. No, this is the week. This is the last week.
Of this week.
Because Monday is a holiday, so there's not going to be. We'll probably. I don't know if we'll still do the call. Maybe I'll still do the call, but we're going to not do snipers starting sniper group coaching starting next week. And this week we're going to be doubling up on adding extra time in the hedge fund live sessions as well.
Mm-hmm.
We usually do anyway.
So this sniper session now, no snipers group coaching this week, but next week it's a public holiday.
We're going to do snipers group this week. Yeah.
Oh, you are? Okay, cool. No worries. In that case, I'll see you then.
Yeah, we'll see you on Wednesday, right? Yeah. So Wednesday, still snipers group coaching. That's still on starting next week. The only change really is there's no snipers group coaching next week.
Mm-hmm.
All right, that's a lot of information. If you have any questions at all, just reach out to Gerardo, me, support at MikeNWTradeCoach.com, or call me or email me directly. If you need support, please don't hesitate to reach out. Have a great day, everybody, and we will see you tomorrow at 3 p.m. Eastern for Hedge Fund Live. We got a lot of good stuff happening there too. All right, everybody. Thanks, everybody.
Thanks, everyone.
Great. Thank you. Bye.
Bye. Have a great day.